Taking a look at today's interest rate markets, let's look at the 10-year note futures as they're experiencing some selling pressure today. We're seeing them down to basically a one-week low, just shy of that, a six-session low, as the markets are adjusting here to various themes. Futures price 118.27, so back in the 118 handle today. And I think when you look at some of the reasons why we're seeing this selling pressure, it's a couple things to point to. Number one, retail sales data this morning stronger than expected, indicating that the consumer is still relatively strong based on some of the metrics within that data release this morning. And there was some concerns about consumer confidence and things of that measure, but retail sales certainly outpaced what the expectations were for the previous month. So I think that was part of the reason why we did see initially some selling pressure. And then throughout the day, we had other themes coming into the market. The Fed chairman was talking today, and that had an impact on the markets as well. Really didn't shift the dynamic too much, though, from at least the 10-year note perspective, as we did see it continue to hold on the lower end of the range, as he indicated that supply issues continue to be a challenge for the economy moving forward, and they will continue to be very vigilant, about defending against inflation. So really stayed the course in his message, and therefore we did see the bond market and the treasury markets holding down here at the low end of the range. Now, what is interesting today when you look at the yields, there was a shifting in the yield curve today. Looking at the 10-year yield first, let's check that out, and we're seeing the 10-year yield up, 9 basis points today to 297 basis points, so just shy of that 300 basis point level as we continue to see, again, some selling pressure throughout the day today. The other interesting dynamic, though, is that you're looking at the yield curve selling off more so in the middle of the curve today, where you look at the 2s, the 3s, the 5s, and the 7s are selling off more than the wings, and particularly when you look at that middle section versus the long end of the curve, we are seeing the yield curve flattening a little bit today. And again, I think there's a reaction to the data points this morning, certainly, and also to some degree the Fed message this afternoon, as we're seeing it impacting the short durations a little bit more so than the longer durations in today's price action.